Stock of parent company Alphabet soaring after hours as a federal judge rules the company can keep its Chrome browser, will be barred from exclusive contracts, and must share search data. It's a landmark case filed in 2020. The DOJ alleged that Google kept its share of the general search market by creating barriers to entry. With me now is Gil Luria, analyst at D.A. Davidson. Gil, this is just after 24 years after the Microsoft ruling, and I might argue this is the most consequential tech antitrust ruling since. We've got Apple popping after hours. I imagine that some investors are taking the judge's statements here about overreach on behalf of the plaintiffs as being sort of a green light for parts of big tech.
I agree. I think this is a very accommodating ruling. If ever there was a monopoly in big tech, it's Google's monopoly over search. So the fact that the judge says that the remedies required here are very mild, data sharing, and in fact limited data sharing, without requiring Google to spin off businesses, without limiting its ability to be exclusive on Apple, which it appears the case here. That is a very accommodating ruling for big tech that should have be a broad relief to the group, but specifically to Apple because of the implication that they may be able to continue to have Google as the exclusive search provider and collect that very high fee that they collect from Google every year.
Gil, critics of big tech have argued lately that this would be bad for smaller tech because now big tech can move with impunity and not worry so much about the effects on other companies. How do you read it?
That sounds about right. This ruling does say that big tech has a lot more latitude than we did after that post-Microsoft era. Let's not forget the DOJ pursued Microsoft for several years and was very belligerent in pursuing Microsoft, which ultimately led to Microsoft being impaired for the 15 years prior to Satya Nadella taking over. And now this judge is saying, no, we're going to allow some of these natural monopolies to occur even when it appears the DOJ was able to prove that Google had abused some of this monopoly power at times. And that is again, a relief to big tech on one hand and a setback for upstarts on the other hand.
Gil, at the same time, in the past, one might argue that this is a slap to the DOJ, other potential regulators. But as we've been discussing in this show, the Trump administration has been willing to take on fights that it might lose because it's just more nimble. There are other ways that the administration could impose pain on big tech if it doesn't want them doing M&A, despite what the courts are saying here. Do you think this frees up these larger companies to do M&A, or are there still enough deterrents that they won't?
No, I think that's a great point. The Trump administration has been willing to use levers that previous administrations have shied away from, which is why big tech is working so hard to ingratiate itself with President Trump. But this doesn't necessarily mean that the M&A door is going to be open for these companies. You could allow Google to persist with its search monopoly and still not allow them to make acquisitions. So it's not clear that we're going to allow these companies to make acquisitions, large ones, substantial ones. That's separate than whether or not you're going to break up an existing monopoly. And the other thing to keep in mind here is that Google's successful argument on this case has been, hey, we're moving to the era of AI anyway. Our monopoly is in search, which is backward-looking. Look at how competitive the AI chat market is. Look at how successful OpenAI is with ChatGPT, Meta is, Anthropic, etc. That's likely part of the argument that's won and may have been accepted here. But that doesn't mean that these companies can go out and do substantial M&A.